This is Sunny from TokenPost. We've been invited to Aptos Experience 2025 in Brooklyn, New York. I'm here with Mr. Maurice. He is the CEO and co-founder of Yellow Card. Can you briefly introduce yourself and also about what Yellow Card does?
Yes, I am Maurice, CEO of Yellow Card. We are the largest licensed stablecoin payments infrastructure provider for emerging markets. So we work across Africa, Southeast Asia, South America, parts of the Middle East. We work with banks, large financial institutions, companies like Visa, PayPal, and then large corporates, right? SpaceX, people like that, helping them, number one, get into the space in a safe and compliant way, especially with stablecoins, and then be able to implement this technology into their existing payment flows. And then finally, just help them move money, right? Especially for these large corporates, help them manage their treasury, help them move money around the world where needed.
Cool. And a little bit about yourself. I think you left that out.
Yes, yeah, well, look, I was born and raised in New Orleans. I went to school in Alabama, so I'm about as Southern as it gets.
You hear that accent, though.
I don't have the accent, but yeah, now I, just travel around and do this, man. This is all I do. I don't even have hobbies. I have literally nothing else to do.
Describe that Yellow Card success across Africa as the blueprint for your expansion to Latin America and even Asia. What specific lessons from your African role are shaping your entry into markets like Argentina, South America, Brazil, and India? And how do you plan to address sort of the distinct regulatory and cultural nuances of these regions?
Yeah, so I think that with any of these countries, they're all so diverse and unique, right? And what I always like to tell people and remind people, because I think when people think about Africa, especially outside of the continent, people often think of it as like a monolith, right? It's one big country. And the reality is that Botswana and Nigeria have about as much in common as Italy and South Korea, right? And so it's a very diverse place. It's a very diverse continent. And that diversity and having to navigate that for so long, I think helped us build out internal playbooks and just an understanding and institutional knowledge around how do you navigate different cultures? How do you navigate different ways of doing business? And implement a system that can be standard across these countries, despite how different these countries are. And so, that's something that we've tried to apply everywhere that we've gone is, how do we get in, get deep, get local, make sure that, we're working with regulators, working with, the institutions that we need to be working with, and make it happen.
And I'm assuming you guys got the people, Yellow Card, at the places, at the location, on site.
Yeah, it depends on the country, right? It depends on the country. Some stuff is regionally handled, some stuff is very local. It just depends on the market.
So your July partnership with Aptos Labs launched gas-sponsored instant stablecoin transfers in 20 African countries. So what measurable impact have you seen on transaction volumes, user behaviors, since eliminating the fees, and how might this model influence broader adoption in other emerging markets?
Yeah, look, we support a number of L1s, right? And when we launched with Aptos, I think I was quite surprised at how quickly it took off. Because look, the reality is with most of the chains that we support, it takes a lot. It takes a lot of effort. It takes a lot of marketing. It takes a lot to actually get them, to get that support over the line, right? And with Aptos, it was, just so much quicker. And I think it really speaks to the ecosystem that Aptos has built. I think it speaks to the technology that Aptos has built, right? And again, just the offering for these customers. And yeah, look, the volumes continue to grow. It's been a great partnership, and so we're excited to, just keep doubling down, right? Let's how do we keep growing faster? I saw Avery yesterday, and he said, "Hey man, volumes have grown, 10x on Aptos," and I said, "Well, that's great." And he said, "Well, why not 20? So Avery is very hard on me. He's very tough. So we got to keep working to make him proud.
It's doubling down. So Yellow Card's latest report, it says that businesses in emerging markets adopt stablecoins to survive unpredictableness of economies and manage cross-border trade, obviously. How are you tailoring Yellow Card's product to meet these needs and what sort of obstacles, maybe regulatory or otherwise, could potentially slow adoption in the next few years or otherwise?
Yeah, so I'm careful saying this because I don't think this is the case now, but I think that we're quite close to sort of escape velocity in terms of stablecoins. And I do believe that with the current administration in the US and the very friendly sort of approach towards the industry, that the industry will reach that escape velocity within the next 3 years of the current administration. So I really don't see much slowing this industry down, even in terms of regulation, things like that. I think that countries and regulators and all have come around to the fact that these are just dollars. Stablecoins are dollars, right? And look, the dollar is already used in every country on earth. And so it's not replacing local currencies. It's not impacting it's not negatively impacting local economies. It is providing better technology for people and institutions to use the dollar, which is a currency they already use. And so I think these regulators, the countries have come around to that. I think you're going to continue to see a much more friendly shift in regulation. And I think that, again, despite frankly, I think there's more uncertainty in the U.S. than there is in a lot of other places, because who knows what happens in 3 years, right? But I think that despite that, I think that the industry will hit a velocity that just won't be able to be stopped in terms of adoption of this technology. The banks, look, we work with banks and large financial institutions. I'll give you a great example. So a few weeks ago, I don't want to give too much specifics away because it'll be obvious who I'm talking about. I was in a certain country and I was meeting with this large financial institution. The CEO set up the meeting. I had their entire C-suite in a boardroom, and I walked in and I told them, guys, 2 years ago, your customer service reps wouldn't return my calls. And how the entire C-suite is here to talk about stablecoins, right? So it's come a very long way in a very short amount of time. And so I am obviously biased, but quite bullish on the growth that this industry is going to see. So stablecoins are going to $1.50, baby. We're going up. We're going to the moon.
Yes, that's great. So as you said, scaling. With stablecoin transactions values now surpassing those obviously of Visa, MasterCards, and 99% of Yellow Card's business in stablecoins. How do you balance rapid growth with compliance and consumer product protection in jurisdictions where regulatory frameworks are still evolving or non-existent yet?
Yeah, the reality is compliance has to come first, and you have to figure out growth around compliance. Compliance has to come first, especially when you're working with large financial, when you're working with banks, when you're working with Visa, when you're working with people like that. It has to be a compliance first approach. That's critical. And so I think from our standpoint, we've done a good job of focusing on compliance, focusing on that regulatory engagement, but then still finding ways to grow within that framework, right? And I don't think that you need to employ the, YOLO, screw it, go to the moon model to be able to be successful in this industry.
So, done with the serious stuff, some fun stuff. So people love the story of your trading Pokémon cards.
Hell yeah.
Before founding, obviously, this 200 million over Fintech. Looking ahead, what sort of Easter eggs in the global fintech landscape excite you most? A bit of account abstraction, interoperability, or something more unexpected? And how is Yellow Card positioning itself sort of for the next wave of innovation?
Well, my brother, let me tell you, I'm just hoping that Fintech can catch back up to Pokémon, because I don't know if you saw the market recently, but Pokémon is outperforming crypto right now.
It is.
So I think first we got to catch back up to Pikachu, and we can talk about innovations from there. But no, look, I mean, I think since you brought up Pokémon, what I will say is, what excites me about this space is getting back to, look, when the NFT craze happened back in 2017 or whenever that was, I was quite excited about it because as somebody that started, I mean, you know, my first, you know, job, so to speak, was in like collectibles. I completely understand the value of, you know, immutable proof of ownership for like collectibles and unique, you know, content, right, online. And so that was something that was extremely exciting to me. And I think that, you know, the industry just sort of took it a totally different route, right? And you just ended up trading $100,000 pictures of monkeys on chain and, you know, things like that, right? And so one thing that is very exciting to me, and I think we're gonna see more of, is like collectibles on chain. And there's a number of great projects that like Collectibles, the project. There are a number of great projects that are working on this, and that are working on, you know, how do you bring hobbies, collections, things like that on chain in a way that still respects the, you know, the collector and the desire to have that, you know, that physical item or that card or whatever, but, you know, provides a value that enables the hobby and the collection to scale at such a, you know, massive global rate. So to me, that is an extremely exciting implication and implementation of this technology. You know, look, obviously fintech, I mean, you know, look, we talk about fintech all the time, right? And like what it's going to do for finance. So I think, you know, that's a, you know, a beaten horse, right? But yeah, I think outside of like finance specifically, that is something that's very exciting to me still, is like NFTs, but implemented in a way that doesn't suck.
Did you honestly expect Yellow Card to be this big and growing this fast?
No. No, of course not. No, I mean, look, it's, you know, I think it's funny, like as a founder, at least as a first-time founder, when you start out, you actually think it's going to be much bigger. Okay. You're like, no, dude, we're going to, like in 2 weeks, we're going to be $1 billion company, dude. It's like literally, like, for tomorrow, dude, we're going to be the next Apple. And so, you know, when you start out, it's like, no, we're going to take over the entire world. Then you quickly get a reality check, and you sort of start to, you know, your expectations become more realistic. And so, you know, did I think that we were going to be successful? Yes, I think that we had a good idea, a good playbook, a good plan to implement. Did I think, you know, did I ever imagine like having a team of 200 people and you know, billions of dollars in volume and this and that? That part you never really think about, right? You think about like the customers, you know, you think about like, well, one day, you know, we're gonna have banks using this and that and this and that. So like that part of it, yes, that part I sort of expected. I think it's happened a lot faster than I thought we would, just because the market has adapted so quickly. But like in terms of like the actual internal team and like the size and that kind of thing, that's the thing that you don't really think about, you know? Okay. All right. So yeah, so I thought it would be big, but I never really thought about what it means to be big, right? Yeah.
I have to ask you this question. So last week was horrible market crypto. Were you influenced by it? Do you think it's going to recover? What's your take on this?
Look, I mean, crypto is going to continue to be volatile for a while, and obviously a lot of the projects in crypto are specifically oriented for volatility, right? I mean, like Hyperliquid is intending, I mean, you know, 100x leverage, it's intending for volatility. And so, you know, volatility is always going to be a part of it. And again, I think that's why, you know, it's so important, the distinction that's happened between the broader crypto market and stablecoins over the last several years. Because the thing is institutions are not going to get into what you saw last week.
Right.
PayPal does not want, you know, to launch a token that's going to collapse overnight because of, you know, people getting licked on, you know, exchanges all over the world and this and that, right? And so, you know, stablecoins are a very important distinction in the industry of just stability and, yeah, all of that.
So, yeah, any last message for Korean viewers from Yellow Card?
And we're coming. My man is bringing us to Korea. He said that it's going to be 10 times bigger. He said that the Korean market is next. He's also the lead investor now.
Yes.
He pledged $3 million. He's a very rich man. Know this.
Not dollars.
$3 million, not one. $3 million US dollars, hard cash. He's going to be delivering it in a suitcase later. He's a very rich guy. Make sure you know that. Everybody out here, this is a big boy.